Hi, my name is James. I'm one of the directors at Moore Stephens in Perth. Moore Stephens is part of Moore Stephens International, a global network spanning over 100 countries and more than 200 offices. We specialise in helping businesses come to set up in Australia. We're often asked, how easy is it to do business in Australia and to set up here? The answer is quite easy. We rank in the top 10 in terms of ease of starting and setting up business in Australia, particularly around speed, cost of setup, and low amount of working capital and issued capital. There also is no requirement for local ownership. So a foreign company can set up here without the need for a local partner. One of the compelling reasons businesses look to come to Australia is access to our world-class research and development, our competitive cost structure, our good exchange rate at the moment, our language in terms of English being widely spoken, and in the case of biomed, equivalent recognition by the Drug Administration in the US of our local administration and research and development. The R&D tax refund is probably one of the further most compelling reasons. For businesses with an aggregated turnover of less than 20 million, Australia provides access to a 45 cent in the dollar refund for eligible research and development activities conducted here. In order to qualify, you must be an Australian company. Because the government is giving you a refund, they will scrutinise the nature of your claim. For this reason, we work closely with R&D specialists so that you plan and document your research and development activities adequately, your R&D schedule is completed correctly, and you are prepared for an audit from AusIndustry. In terms of receiving your refund, our tax year runs from 1st of July to 30th of June, and after lodgement of your tax return, we typically see refunds received between 3 and 10 weeks post-lodgement. The reason for the difference in time is first year claims generally take longer, with subsequent years being quicker. How does tax in Australia work? Our tax system, in terms of administration, is relatively straightforward. We have taxes on a federal, state, and local level, but most taxes that foreign businesses are concerned with are on a federal level. Our federal government administers income tax, GST, capital gains tax, and fringe benefits tax. As a business, the most relevant state taxes will be stamp duty and payroll tax. Local taxes will be limited to council and municipality rates. In terms of federal income tax, our tax year operates from 1st of July to 30th of June every year. You generally have a few months after the end of the year to lodge your income tax return, unless you use the services of a tax agent like ourselves, which extends the period for lodgement for almost 12 months. Fringe benefits tax is a tax akin to benefits in kind in other countries. The difference with Australia is we impose fringe benefits tax on the employer, not the employee. Our fringe benefits tax year runs from 1st of April to 31st of March. Capital gains tax is added onto the other income of a business, and our capital gains tax regime is very broad. It covers what you would ordinarily expect in terms of disposals of assets and property but extends to transfers of shares and even shifting of value within a company. The state taxes most relevant for a business will be stamp duty and payroll tax. Stamp duty is imposed on property transfers and can also apply to business transfers in a number of states. Payroll tax is one tax that catches most businesses by surprise. This is a tax imposed at a state level at different rates depending on the state in which you employ people. When your payroll exceeds a certain level, you will be paying payroll tax on the value of your payroll. In terms of setting up in Australia, there are a number of entity choices. For smaller businesses or those who are locally family owned, the use of a trust is very common and provides flexibility and reduction of tax for capital gains. For most overseas businesses looking to set up here, it comes down to two choices: a company or a branch of a foreign company, referred to as a permanent establishment for tax purposes. In terms of tax, both are treated similarly. They are taxed as companies, currently at a rate of 30%. This rate is soon to be reduced to 27.5% under proposals by the current government. Both are subject to transfer pricing rules. Transfer pricing is the intercompany transfer of monies for services or goods between related parties. Both require a resident director for both tax and corporations law purposes. When we refer to resident director, the resident director doesn't need to be a holder of a permanent residency visa or a citizen, but they must have a right to remain in the country lawfully. A common example is a temporary resident, such as someone here on a work visa or even a student visa. It cannot be a person on a tourist visa because a tourist visa explicitly prohibits you from working in Australia whilst on that visa. In terms of entity setup, setting up a subsidiary company in Australia is very rapid. A company can be established within a few days, and tax department and companies' registrations occur within 28 days. The opening of a bank account can occur soon thereafter. This compares well to a branch and will aid in you being to market sooner. We do see clients setting up branch operations here, often for tax or commercial reasons outside Australia. The warning there is the lead time can be lengthy. It is not uncommon for a branch to take 3 to 6 months to establish due to the rigorous vetting process by the government departments in Australia. Of late, money laundering has been a concern of government departments, and they go through a rigorous identification process to determine that the company is legitimate and does exist. This includes obtaining copies of registration and identification documents from the home country, which must be certified by a notary public or sometimes the Australian consular or embassy, and paper originals being sent to us for forwarding onto the government departments. In terms of ongoing compliance costs in Australia are relatively modest. With the exception of a local director and the need to appoint one and perhaps pay a fee for one, the other costs extend to accounts and audit in certain circumstances, GST returns, and annual income tax returns. In Australia, you must lodge income tax returns annually. For most businesses, lodging and registering for GST is worthwhile because business-to-business transactions are designed to be a tax neutral proposition. What we mean by that is businesses charge GST to other businesses who claim it back, and they claim tax credits on any supplies or expenses that include GST. GST registrations require you to lodge either monthly or quarterly. In most cases, we recommend people lodge quarterly on an accruals basis that matches their accounting basis. There will be circumstances where people lodge on a monthly or quarterly basis depending on cash flow, or they lodge on a cash basis depending on the way in which they do business. An audit is required for any company controlled by a foreign company. An audit is not required of a branch, but it must lodge, the branch, financial statements with our government departments every 12 months. In certain circumstances, small companies can reduce their audit requirements by applying for audit relief. In many cases, we apply for this relief on behalf of our clients. Commonly, businesses who set up in Australia look at the cost of employing people. Wages can be high in Australia, but our exchange rate has made us more competitive recently, and we have a base of highly skilled workers. In terms of costs of employment, wages is the obvious one, in addition to payroll tax mentioned previously. In addition to this, in Australia, there is superannuation at a rate of 9.5% that must be added on as an employer cost to wages. This is akin to pension benefits in the UK and your 401k in the US. The employer bears these costs, and the employee can voluntarily add to it, but isn't compelled to do so. Where you have employees being seconded to Australia, we do have some treaties in place where you do not need to pay superannuation in Australia if it is continuing to be paid overseas. The primary example is the US, where continuing Section 401k contributions will absolve you from an obligation to pay superannuation in Australia. Superannuation must be paid quarterly and cannot be more than 28 days late without incurring penalties. Employers must provide a default fund for employees, and employees cannot withdraw their superannuation benefits until they each reach their retirement age. The retirement age is generally between 55 and 60, depending on when you were born. If you are here temporarily and you leave Australia permanently as an employee, you can withdraw your retirement benefits early on the basis of never returning to Australia to work. This will incur an exit tax in addition to any taxes already paid. Australia has a PAYG withholding regime, the equivalent to pay as you earn in many countries. During every pay cycle, you must withhold tax from your employees' wages. This is remitted to the tax department every month or quarter, depending on the size of your payroll. On an annual basis, you must report all the employees who receive payments and the amounts they received, along with issuing a payment summary to them so that they can prepare their own income tax returns. The PAYG withholding obligation is one that the tax department takes extremely seriously. To this extent, the local director bears personal responsibility and liability for unpaid pay-as-you-go withholding for employees. This is because this is considered the employee's money, which the employer is withholding and remitting to the tax department. An outstanding pay-as-you-go withholding debt can result in the director being issued a director penalty notice personally, which they must pay. The same applies to superannuation I mentioned earlier, because this is again an employee entitlement the Australian Tax Department takes very seriously. Transfer pricing has been in the press more recently. Base erosion and profit shifting has become a topic for governments and been sensationalised by the press. Australia is no exception. Australia has recently broadened the rules for capturing services delivered through the digital economy. We have to bear in mind that many of our tax laws in Australia were written at the turn of the century, with a rewrite that occurred around 20 years ago. These acts were not written with the current e-commerce trade in mind. This being the case, the government is looking to capture more of these services that are currently outside the scope of tax in Australia. When adopting a transfer pricing model, you must always be aware that the government is looking at transactions between related entities, particularly in lower tax jurisdictions. Documentation on the basis you have chosen, the pricing model, and reason for the charge is very important if you are to reduce penalties and interest in the event of audit. Your biggest challenge will be keeping the tax authorities in both countries happy and satisfied the basis you have chosen is correct. If you are looking to use debt to fund your Australian business, particularly if it's a large-scale property development, thin capitalisation is something you need to be aware of. Where your interest and debt deductions are more than $2 million, the rules effectively state you cannot fund Australia by more than 60% debt. When we say debt deductions, we're referring to interest and debt deductions from all sources, not just related to party borrowings or bank interest. Having helped businesses establish in Australia for many years, we help with setup of the entity, all registrations with the Australian Securities and Investments Commission, who administer companies, and the tax department. We act as local director. We help you open the bank account here with dual signatories in most cases if we are local director. We prepare accounts using cloud-based software so there is complete transparency and visibility at all times. We apply for audit relief where it is available, and we liaise with the R&D experts to lodge your tax return and R&D claims if you are claiming the R&D refund. The most important thing is we provide a basis for making contacts in Australia. The reality for most businesses is coming to a new country means your contact space starts from ground zero again. We help you build this contact space and make introductions to the right partners to help you take your business forward. If you have any questions or would like more information or assistance, please click the link below to contact us directly. We are always happy to help.